One of the things I want to do is I want to make sure that people understand what investing in each particular investment model looks like. There's a lot of misnomers out there. People are going, oh, I want to invest in multifamily for cash flow. Multifamilies don't generate cash flow like they used to. You have to be aware that there's a lot you can do that doesn't require you to go out and raise capital when you've never done a deal yourself.
Joining us today is Elizabeth Kelly. Elizabeth, can you tell us a little bit about your background in real estate and how you got started in the industry?
Sure. Thank you so much for having me. It's a pleasure to be here. So how I got started. So I met my husband in 2005, and he already had a couple of properties with his best friend, who was his business partner. And I started seeing what they were doing. And of course, the market was doing well in 2005, as it always does before you head into a downturn like we did in 2008. So we just started buying. We bought 6 units in a condo building. We bought a bunch of single family homes, turned them into duplexes. And then around 2008, we took some courses with Rich Dad, Poor Dad Canada. And we kind of exploded after that. And my husband went crazy and buying apartment buildings, and I was doing rent to owns. And it's amazing, I kind of blink and I'm like, 15 years has gone by, 20 years has gone by. And
Yeah.
it's always an adventure. Every day is different, as you know, as an investor.
Now, one thing that you said there actually caught my attention. So you were doing the rent to own and your husband on the multifamily side. Did you guys just sort of pick your own niche and go with that? What was the decision to each one sort of go with their own strategy?
Well, the goal was by the time we took our courses, we already had 19 units. So I had been able to leave my job, but we wanted my husband to be able to leave his job. And our whole vision with investing in real estate was we wanted to save for our retirement. So we decided to divide and conquer. So he was in charge of building our retirement funds, and I was in charge of generating cash flow so that he could leave his job. So that was kind of our vision. And the thing with apartment buildings is it sort of lent itself to evenings, weekends, a little bit of travel. It's one of those investment models that you can do relatively passively, hands off, as long as you have a property manager and a team that you've cultivated. And we were buying out of province. So we weren't going to be taking time on the weekends to drive over and look at properties anyways.
That makes sense. I love that combination though, is like, one focusing on like the short-term need to make that transition and the other one focusing on, hey, let's pull towards the retirement. Okay. So for people out there who don't even understand what the rent to own concept is, can you just break that down just slightly for us, please?
Sure. It's basically becoming a bridge for a family between where they are now and where they can be in the next few years, with a little bit of support, a little bit of education, and a little bit of discipline. So right now, we know in the last few years, it's gotten harder and harder to qualify for mortgages. There are a ton of people out there who have been through a really challenging time in the last 5 years, whether it's divorce, job loss, illness, whatever it is. But those are all things the bank looks at you and says, I won't give you a mortgage because your credit score isn't high enough, or you don't have enough of a down payment saved and because you're self-employed. There's a whole bunch of different reasons, but basically we enable people to look for and purchase a home now with our investor partners, with the idea that in 3 or 4 years, when they have saved their down payment, when they are fully educated, know how to manage their finances, and when they have all their ducks in a row, then they're going to be able to buy the home from the investor. So I kind of think of us a little bit like bridge financing.
Oh, no, that makes a lot of sense. Now, are you exclusively handling like everything that has to do with the rent to own side of things right now, and your husband's still everything on the multifamily? Or is it a case of like, hey, this is what you enjoy doing, this is what I enjoy doing, and there's some sort of an overlap in between?
That's such an interesting question. So for me, I need to feel good about what I do. So one of the biggest challenges I had starting real estate investing, my background is not for profit. I did event planning and fundraising for charities. So I'm very used to going home at the end of the day and feeling like I did something to make the world a better place. And when we got into real estate, I felt really crappy. I'm like, I feel like I'm just here to like make money. And even when you provide housing, we started a property management company, and it's a really thankless place to be, because if you're doing a good job, your owners think you're spending too much money and your tenants think you're not spending enough. So you end up like
Yeah.
this unpleasant squished sandwich in the middle of a squished filling in the middle of a cookie. So I wasn't feeling great about what I was doing. I wasn't feeling fulfilled and passionate. And so by 2012, I started teaching for Rich Dad, and I started sharing, what we had learned and our experiences, and sharing kind of some of our insights and how people could do what we were doing. And from there, I became a trainer for 8 years, and then I opened my own coaching business. So although I'm not doing a ton of rent to owns myself anymore, I am teaching people how to open rent to own companies and how to make a bigger difference in their communities. And in most of my clients have sort of niche markets where they are utilizing rent to own as a way to help people.
Okay, okay. No, I get that. So just to understand the timeline, did you first go into like the property management side? Was that sort of a way to get some active income within real estate so that you could completely leave your job? Was that the timeline on that?
No, the property management was more an accidental thing. It was, we were buying properties in remote locations, so hours and hours away from us. Specifically, we had a portfolio in St. John, New Brunswick, and then we had a large portfolio in Kirkland Lake, Ontario, which is about 7 hours north of Toronto. So we were trying to hire local property managers, but everybody kind of has their own system, and we had a way specifically that we wanted our buildings managed, a way that we wanted our tenants cared for, a way that we wanted things done. And people don't tend to like it very much when you come in and tell them how to do their job, especially when you're new to them.
Yeah.
So we ended up just deciding it would be more cost effective and easier for us to hire our own staff and run our own company, which was what we did. And then we started managing for other people a few years in, because we sort of viewed ourselves, we're a little bit kind of like we're like the Toronto property managers in Kirkland Lake. So we used sophisticated software. We really tried to have the same feel that an investor from Toronto would expect, but
Yeah.
we were doing it in the local market so that people could feel comfortable taking advantage of the lower purchase prices in the more remote markets.
That makes sense. That makes a lot of sense. Now, the fact that you guys were investing in different markets. For people out there who are considering this, how are you going about identifying the ideal investment markets and sort of the winning strategies within those markets? What advice do you have for those people?
Well, there's really two ways that people get into real estate. One is that they have an investment model that they fall in love with, and then they have to go and find a market where it makes sense, where the numbers work. The second one is they have a market where they're comfortable. Usually it's the market where they live or where they grew up. And then they have to analyze the market, figure out what's going on there, and then choose a model where that makes sense. One of the biggest mistake a lot of new investors make is they assume that every investment model works in every market, and you might get it too, but it generally is not optimized at that point. So you have to be
Yes.
really clear and intentional. Do I need to invest within a community that's within a 1 hour drive? Because every Saturday I want to drive over and like make sure my property is still standing. Do I want to do my own self-management? So I need to be available to do showings, or do I have an investment model that I love, that I've fallen in love with, like rent to owns, in which case, as opportunities arise, I'm going to analyze the market and make sure that it's a fit for that particular investment model. Does that answer your question?
Oh, 100%. It absolutely does. And yeah, you absolutely, you're right. As it doesn't, not all investment strategies work in all markets at all times. So you then decided to make the switch from being very active on the rent to own side to helping other people get into this. Is that still something you do up to today?
Oh, yeah, absolutely. I have clients right now. I'm so proud of them. Um, they are working on starting a rent to own company. He is a member of the Canadian Forces, and he wants to start a rent to own company enabling people in the Canadian Forces to be able to own homes. And there's such a challenge between the amount that they move around and the markets that a lot of bases are in, and then the amount of sort of financial education and access to money they have without anybody teaching them how to manage their money, how to save for retirement, how to plan. If that's not something that your family taught you or that's innate to you, unfortunately, I mean, we were joking about it the other day, but they can buy there's a special store for Forces members, and they can go in and buy pretty much anything they want on payment plans.
Yeah.
So they were talking about how they know some people who, they earn decent incomes, but at the end of the day, when all their payment plans and everything are covered, they don't really have much money left in the bank. So this is a tremendous benefit, I think, to be able to tap into these niche markets and to be able to really focus on who you can help the most with your skills in real estate.
Oh, 100%. And I see the strategy as being a big value add. Because like you say, it bridges that gap, and there's a ton of people out there who want to get into home ownership but just can't. And
Yeah.
it helps them get over that hurdle. Now, one thing I find with a lot of rent-own investors that I help with as well is there's sort of two aspects to it. It's like getting the tenant buyers in and then getting the joint
Yep.
venture partners, and you always short one more than the other. How what advice do you have for people out there trying to figure out, hey, how much time do I put into each? How do I go about managing both ends of this funnel that I need to keep feeding? I'm sure that's probably a common objective that people have in the rent to own space. What advice do you have? Let's see how much gold nuggets I can squeeze out of you today.
I believe that the processes should both be automated. So
Hmm.
there are times where it needs to be you, as founder of the company, it needs to be you who goes out and, attends the investor networking events, or you who goes to the realtor's office and does the presentation and talks about, what renting to own is and why it's another service that a realtor could provide for their client. But there's a lot of things that can and should be automated in terms of the screening process, so that by the time you start working with people, by the time you start having conversations, they're already pre-qualified to some degree, they're pre-vetted. By the time you pay for your marketing and then you've got your screening systems and processes, the people you're working with should be relatively high quality in terms of their ability to actually be able to execute on a rent to own. And I think that really is where it comes from, is delegate as much as you can and then focus your time on both pieces, finding the tenant buyers in person, like the events you need to present at, and then focusing the investors by attending the meetups and those kinds of things.
I love that. I love that. Now, speaking about delegating, because what I found is as well, like with most of these, where you put in systems in and you have some sort of a funnel, is you could either have a ton of leads come in and maybe they're not as qualified as you'd like them to be, so you're spending a ton of time on those initial encounters, or you can have your qualifying systems be a little too strict, and then you're not getting enough coming in, and it's that fine dance and fine balance between the two. Are you delegating those, like the systems and the tech side of things, out to someone else, or is that something you recommend people take on themselves?
I think everyone has to build sort of their own basis. So you need to understand what makes you different from other rent to own providers, whether you have a niche market that you cater to, whether you have a very particular type of service or type of home or whatever it is. You need to know and understand what your competition are doing, what you're doing differently. And then everything that you talk about in a public space, including your qualifying and your website and your social media and your presentations, all needs to reflect what makes you unique. And I delegate where I can. So I don't need to be the one sitting on Canva and creating every single marketing post that goes up. So I can hire people for that. But I
Yes.
have to be 100% clear before I'm ready to delegate. Who am I? What does my company stand for? What are our values and how do we help people? And once we have that clarity, then we tend to be ready to be able to delegate some of it. But I still like to maintain sort of veto power. So although I have a marketing team that does all my marketing for me, we still meet once a month and I look everything over to make sure that everything that's being put out is still reflective of me, my company, and our values.
I love that. I love that. Now, here's a question for you: is it's so tough to balance the working in the business to working on the business, and the working on the business is what helps you create, these systems of operations and just a whole bunch of things to allow you to effectively delegate. Um, what advice do you have for people? I'm sure that's probably could have been an internal struggle for you as well, between balancing the time so that you have the scalability and working on the business right now. what advice do you have for people to find a good balance between the two? What practices did you put in place for yourself when you were growing your business?
Well, it was definitely a struggle, and I wouldn't even say at this point I have it perfect. So it is
Yeah.
absolutely okay to make mistakes as you grow. But what I found is that the more I invested in my education, the more unique my skill set became, and the less people there were who could do what I do. So it started out when I was taking my courses from Rich Dad. We spent, I can't remember, 45 or $50,000 just on those courses alone. And then once I knew that, then I could find someone to clean my house for me for $15 or $20 an hour. I could find someone to cut the lawn. I could find someone to shovel the snow. I didn't need to be the person doing that. It didn't make sense for me because my dollar value per hour went up because there were less people. For me to find someone to do what needed to be done, I had to pay them more. So that was what I started doing was I looked at what's the low hanging fruit? What can I pay somebody to do for me to free up my time? And sometimes it's not just freeing up your time to work. Sometimes it's freeing up your time to decompress or freeing up your time to work out or freeing up your time to be creative and have kind of that balance, because if you don't have that, you can't it's unsustainable to plan to work 20 hours a day for the next 20 years. So, what is the dollar value of your input per hour? And then who can you find to do the lower hanging fruit to give you your time back to be able to focus on the stuff that nobody else can do?
Ooh, I love that. Yeah. That's honestly a big focus point of mine is just trying to see where I can buy back more time, because that's the first thing to fill up in. It's a limiting factor for sure.
It sounds like you've read Dan Martell's book, Buy Back Your Time.
You know what? I've had a ton of recommendations to read it. I think it could be on my wish list. I probably need to check it out. No, I haven't. But it's just a focal point of mine. Initially, it's all about, hey, making money so that you can have all the flashy things. But, you come to realize that it's make money so that you can buy back more time, so that you have more freedom of time to focus on higher income producing activities and then things that just fulfill you. So yeah, it's a constant thing of mine is where can I buy back more time? It seems like you're very systems oriented. So in terms of the property management side, is that something you and your husband tag team, or is that something that you work on solely on your end?
Um, so we closed it in April of last year because there were things that I wanted to focus on that provided more fulfillment than that. After 15 years, I was like, okay, I think I've done my time and I'm ready to move on now. Um, there were times where we both picked up a bigger role. We have, as in most working couples, we are quite opposite. So we both have our strengths and our skill sets. He's an engineer. He's extremely technical. He is a fantastic problem solver. Like if there is a broken furnace, he has gone out and fixed like equipment that the professionals couldn't figure out how to fix. So
Yes.
he's fantastic from that perspective. He manages our renovations, our construction, that kind of stuff. I tend to be more of a people person, so I always tended to run the staffing, the tenant management, the operations, that kind of stuff. But there were times where, I had my mortgage license for a few years and I was enjoying doing mortgages for investors and networking and connecting that way. So um, I love running companies, but property management was not one that I felt really fulfilled in. I feel much more fulfilled as a coach than I think, and as an educator than I ever did as a property manager. I learned a lot though, and I'm grateful for that and for my amazing staff who enabled me to be able to step back when an opportunity presented so I could go chase it down.
I love that. So have you ever read the E Myth by Michael Gerber?
Mm-hmm.
So how would you identify yourself? Would you be more on the management side or more on the entrepreneurial side?
I think first and foremost, and I didn't know this for a long time, I think first and foremost, I'm an entrepreneur
Yeah.
because even when I'm a manager, I still have a hard time with somebody else telling me. I don't mind if we plan and we're strategic about what to do, but I have a hard time with somebody else telling me how to do it. So I think I mean I didn't realize it. I thought I was a problem employee. Like I thought, I kept wondering like why am I disagreeing with my managers? Why am I disagreeing with my boss? Like why do I have such an ethical issue with what I'm being told to do? Why can't I just do it? And I realized because fundamentally I have an entrepreneurial mindset and I have to follow my values, and I do not like being asked to do things that clash with my values, and that fundamentally makes me very challenging to employ.
Yep, I get that. I get that. Now, I think a good skill set for an entrepreneur and even for a manager is um, identifying and attracting like top talent individuals, whether that's just someone that you're partnering up with as a joint venture, as sort of outsourcing some services, or even just bringing in internally as part of your team. Do
Yeah.
you have any advice for people out there in identifying um, those key individuals, or some characteristics or things you look for when trying to identify those key individuals?
I wouldn't say that hiring is my personal gift. I would
Yeah.
say I am definitely competent at it, but it's not something that came easily or naturally to me. Um, I think my biggest downfall is I expect people to be like me. So I expect people to want to show up, to want to do a good job, to want to work hard, to want to get ahead. And fundamentally, not everybody's built like that. So that's been my biggest challenge is sort of tapering expectations for, what I expect of myself as the owner of the business versus what is a fair and reasonable expectation for an employee. Because I certainly wouldn't want to ever be that tyrant who, expected employees to pick up the phone at 11 o'clock at night because, I can't find my shoes. Um, but I think it's important to make sure that there is that alignment between your expectations for that position and then what that person is willing to provide. I think boundaries are a great thing. I think, um, if you are the type of employer or it's a type of role where you expect people to answer their phone outside of normal work hours, I think you need to be prepared to compensate them more than fairly for that. And I think that needs to be communicated from the beginning. I would say, like, I have my assistant who works for me, my online brand manager. Her name's Mary Beth, and originally we started working together, and it was kind of a test. It was I needed some help with a couple of projects, and she was looking for. She was off work because of COVID. She'd been laid off during COVID by her employer, and just as we worked together more and more, it became more and more apparent how well we work together. So she kind of grew into the role. She's been with me for 4 years now, but I think that initial probation period, I don't think people put enough intention behind it. What are the tasks that we want them to accomplish? What is it that we want them to learn? And are we really checking back in and making sure that they are understanding what's going on, that they are fulfilling their obligations, that we have trained them properly? I think fundamentally, most of the time when people don't perform, it's a training issue or an expectation issue, one of those two things.
Ooh, I love that. Yes, yes, I really love that. Um, okay. So I mean, I firmly believe investor and entrepreneurship. I mean, it's a business at the end of the day, right? And you need to treat it like one. So I think that's sort of applicable to anybody. But if we were to sort of just highlight, as a coach, I think you mainly focus on the rent to own strategy on the coaching side, right? Is that correct?
I do multifamily as well, but my
Okay.
specialty is really problem solving. Because I've been an investor for 20 years, because I was a trainer for 8 years, there's not a lot that kind of gets thrown at me that I can't figure out how to solve. So a lot of people come to me with problems. My portfolio is negatively cash flowing. I have to go in front of the landlord tenant board. I don't know how to get started in real estate. I've got 4 properties. The bank told me that's it. I'm stuck. I tend to be a problem solving coach as opposed to any one particular investment model or track, so to speak.
I get that. And you sort of answered what I was actually going to ask somewhat is what do you see between those newer investors? What's like the most reoccurring problems that they come to you with? And then for the more seasoned investors and yeah, what are those common problems and what are some things that you tend to help them with essentially? Now you've already rattled off a few, so I guess it kind of answers my question. But yeah, I wanted to know like, those ones that are looking to get into it and then those that are looking to scale and take it a little further, like what are some common roadblocks that you see them running into?
So, for new investors, a lot of people are just very fearful. They're afraid they don't know enough. They're afraid they're going to make a mistake. They're afraid it's the wrong time to buy. They're afraid that there's some piece missing in their due diligence or their analysis, Or, they might even be in a situation where they know they want to invest in real estate, but they don't know how to get started. There's gaps in, I always think of it like a puzzle. So my puzzle at the end of my real estate journey, my vision for what that picture is going to look like is going to be very different than you. And when I'm starting out, based on my experience, I'm going to have certain puzzle pieces already in the box, but there's a whole bunch of other ones that I'm going to need help filling in. And that's really what, as a coach, I try and do. We try and identify what puzzle pieces are missing, and then how can we put those in place. So whether I'm teaching someone about corporate structure and what they need to be looking at based on how they want to buy and what they want to buy, or whether we're talking about how to run numbers, or we're talking about a mindset piece, all these different pieces that are missing, we try and fill them. Maybe it's just an introduction they need. Maybe it's a connection to someone else. Maybe it's some support with going into a room of investors where they don't know anybody and they're kind of intimidated and afraid. And quite honestly, we're a very friendly bunch and we love to talk about ourselves. So if that's your concern, don't worry about that. You'll be fine. But other more experienced investors, it tends to be a lot more around financing. I've capped out with my ability to qualify for mortgages. How do I work with partners? How do I raise capital? How do I put together and structure a deal that somebody's going to want to be part of? How do I manage my investors? How do I scale up my portfolio? How do I go from buying, 3 and 4 unit buildings into buying 25 and 30 unit buildings? What do I need to know in order to grow? So those are I think those are probably the most common ones, but everybody's unique. And I think that's what I love about coaching is that every day when I get up, my day looks different. The challenges that I'm helping my clients with, they're different. And I have the opportunity to learn and grow as well. And that's really fulfilling.
Yeah. No, I get that. Now, one thing you mentioned there was like the corporate structure. Now, I know this would vary from person to person depending on the goals that they have. And then obviously, full disclaimer, you're probably not a CPA. So, but in terms of how you are structuring it yourself and how you see most people structure it, what does that typically look like?
Well, how it's been done over the years has changed. When I started investing, we bought everything in our personal names, which we just didn't know any better. And that's what most people do. And one of the big challenges is this is one of the areas where no matter who you talk to on your power team, you're going to get a different answer. So your mortgage broker is going to tell you to buy in your personal name. Your accountant's going to tell you to buy in your personal name, but your insurance broker and your lawyer are going to tell you to buy in the corporate name. And everybody's telling you those things because they have different perspectives and for different reasons. So as a coach, it's sort of your job to help people weave their way through and figure out the best structure for them. That being said, the most common structure used to be called the 3-tier, where you'd have the holding company at the top, you'd have an active business, and then you'd have a real estate holding company that actually was on title for the properties. Over the years, the government has changed the tax rules, and that structure is much less appealing. It's become quite cumbersome. So a lot of times what you're seeing is people just going directly to buying in a corporate name and not having that multi-level structure. That being said, you need to talk to your accountant and your lawyer in order to determine, based on how you intend to structure things, whether you're going to have partners, what your personal assets are. All of those should be a factor in deciding the best structure for you. And what I like to do with my clients is I say, okay, book your accountant, book your lawyer. I'm going to jump on. We are going to spend 1 hour and we are going to hash this out. And you are going to come away from this, because you have all the essential people on your power team involved. You're going to come away from this with an answer. And that's been the most effective way that I've seen, as opposed to, okay, go talk to your accountant. Your accountant tells you to buy in a personal. Now you go talk to your lawyer. Your lawyer's like, oh no, you need a corporate structure. Then you go talk to your mortgage broker and they're like, oh, it's so hard to get financing in a corporate. Like, you just end up running around like, a chicken with its head cut off. So getting that clarity, I think, is a huge piece in terms of helping people move forward.
I love that. Bringing them all together so you can see where that fine overlap is that you should sort of be in, right? It's a fantastic idea. Now, I'm guessing you'd probably recommend people get the setup properly from the beginning versus, hey, let's get started in real estate and then try and optimize it further down the road, right?
Absolutely. It's much easier to scale when you create your systems and processes when you're small. So your minute books need to be updated every year. And you might as well start doing that when you have one corporation versus when you have 10 corporations, right? And people don't always see where they're going to end up. So people say, well, I'll give it a try. I'll buy a couple of properties and see how it goes. And then they figure out, wow, I love this. And then they set up the corporation and now they've got stuff inside and stuff outside and it just gets messy. So
Yeah.
typically, if you believe that you are going to scale to any degree, and if you're going to take on partners, I'm always going to recommend corporations. But like you said, yes, I'm not an accountant, nor am I a lawyer, and you need to seek professional advice.
But no, those are some good tips though. Now, what advice do you have for those investors who are like, hey, done a bit of residential, but I'm looking to move into that commercial space, wanting to scale up, want to make that transition? What are some things that they struggle with, and what are some tips that they could sort of do to make that transition a little easier?
Good question. One of the things I want to do is I want to make sure that people understand what investing in each particular investment model looks like. There's a lot of misnomers out there. People are going, oh, I want to invest in multifamily for cash flow.
Yeah.
It does not generate cash flow, at least in Ontario or Canada. Multifamilies don't generate cash flow like they used to. You have to be aware that it is typically going to be a long-term wealth building, strategy. It is not going to be a cash flow play. So you need to first make sure you are fully educated about the investment model that you're looking at. Then you need to make sure you build the team of experts around you. So typically the person who helped you find your single family home to do your BRRRR and create and convert it into a duplex is not going to be the right realtor to help
Yeah.
you find that 20 or 25 unit apartment building. It's the same with financing. Your mortgage broker who helped you get residential financing, not every brokerage is set up or trained and experienced to be able to help you get commercial financing. So you need to look at leveling up not just your own knowledge and you need to look at leveling up your team around you as well.
Yeah, because it's a totally different ball game. So yeah, you need different power team and different rules, and no, I agree. And then with regards to the the new build side, is that something that you're seeing common in the markets that you sort of helping investors in, the new build multifamily side, the infill side?
So you mean sort of like the almost land development piece?
Yeah, the six plexes,
Yeah.
the eight plexes, or even going the residential, but like on like 3-4 lots with basement suites and pushing that over into the commercial finance inside. Is that something you've seen a lot of on your end?
It's definitely become more and more popular in the last few years because it's harder and harder to play in the single family home to duplex conversion space. It's the development is typically where you are going to see a bigger increase in equity. And
Yeah.
I mean, it's just financing is more challenging all around. So typically you're better off if you can have one or two really good deals, that's better than, four not so great deals.
Oh yeah. No, I get that. I get that. Now, one thing you said fairly close to the beginning was, like the contributing factor, and I think that's why you find in a lot of fulfillment with regards to the coaching. But taking us into like the investing side, how do you ensure, how are you ensuring ethical practices in your real estate dealings? What advice do you have for people out there like, hey, I'm really trying to create that win-win-win environment for everyone involved. I want to get the highest ROI, but I want to be ethical about things. Anything that you sort of any advice that you have for them on that?
It's such a tough space because I know there are so many people who firmly believe that OPM is the way to go. And there's a lot of hype right now and a lot of, if you don't have any money, just go buy real estate with other people's money. And there's a lot of, oh, I hoped it would go this way, but it didn't. Sorry about your luck.
Yeah.
Or, well, I borrowed 125% of the purchase price because I wanted to do renovations, but it didn't work out. Sorry, I lost your money. I have a real problem with that. And I'm going to try and not be too harsh here because I know as newer investors, when people attend meetups and they see someone standing at the front of the room going, use other people's money. You don't need to have any of your own. Do, 100% loan to value. I know that they don't know any better, but the reality is those are the investors right now who are in major financial issues. Like we've had a number of investors who have declared bankruptcy, gone under, lost investors' money in the last 2 years. And it really comes down to leverage. They are over leveraged. The people who have been able to weather these storms, typically their portfolio, I mean, 65% loan to value is kind of the sweet spot. So if you're in a situation where you have $200,000 and you could do nothing with that money and just borrow other people's money and do deals, know that it is their money that's at risk. And know that when the market goes down or you run into an issue and you can't sell the property for as much as you needed to refinance, whatever those unexpected things or half unexpected, but should be contemplated things happen, that when you have none of your own money in there, that you are playing with somebody else's future. You are playing with money that somebody else raised. And I don't borrow money unless I have the ability to be able to pay it back from somewhere else. So I might borrow money for a particular project, and then I'm going to make sure that in the event that things don't go according to plan for that project, I have capital somewhere else so that I am never in a situation where I have to go to someone and say, I'm really sorry, I lost your money.
Yeah. Because ultimately, at the end of the day, you should treat people's money with more respect and more responsibility than your own, because it's people's livelihoods at the end of the day. So, I completely agree with that. And I sometimes do come across people who've been taught, hey, you could get into real estate, no experience, no money down, no resources, nothing, and just grind at it, and you can get it. And I don't know if it's the best way to go about things. What's your recommendation, your personal recommendation, if you come across someone who's like, I really want to get into real estate. I know this is a good investment vehicle for me. I don't have the resources right now. What are some steps they can take to sort of get into real estate a little more ethically?
Gotcha. So financial resources are only one component that's needed. And typically people, when they come in, they might not have financial resources, but they could have time resources. So this is what I like to encourage people to leverage is, first of all, your first couple of deals, you're probably going to make a mistake. So understand that that is the riskiest time to borrow money in your first couple of deals. So maybe what you decide to do is to partner with someone and say, hey, my contribution to this deal is going to be my time. I'm going to do the research. I'm going to do the marketing. I'm going to do the legwork, like whatever you need me to do. I'm going to manage the renovations. I'm going to manage all of this. This is going to be my contribution for a small piece of the deal because I want to learn. And so working with someone else, learning from someone else, but not having, an investor putting money in with you and putting that money on the line, that's typically the way I like to move ahead. The other thing that I really recommend, and I've been doing a lot recently with people, is starting side hustles to be able to enable them to save up capital faster. So it might be that, they're interested in Airbnb. Okay, great. Let's start an Airbnb company where you are managing on behalf of other people. You're going to spend a little bit of money on getting a coach and some education, but you're going to start a company, you're going to start bringing money in, and that will enable you to save that money and to be able to purchase a property in the future with a down payment. And you have better qualifying room when your income's higher as well. So there's a lot you can do that doesn't require you to go out and raise capital when you've never done a deal yourself.
I'm not going to lie. I love both of those, like, wholeheartedly. That's fantastic. That's fantastic advice. Fantastic advice. And if I had to ask a question that maybe new investors are like, but where do I find this? I'm guessing you're going to say just go out and network. Go to as many events as you can, shake as many hands as you can, go for as much coffee as you can with people, and just, you'll eventually run into someone where you can pitch your services, and someone who potentially doesn't have the time that could use your services, right?
Yeah, there's a bunch of investors that I can think of right now who are in situations where their renovation stalled, the budget blew up, they can't afford to finish. Like if you were willing to take a couple of weekends and go work alongside a couple of investors and just, you're painting walls. It's not a really high level skill set, but to be able to hang out with people and network and connect and for people to see your work ethic and your integrity, you will be remembered and fondly.
I love that. And I think it's also just realizing where you are in your journey, and maybe it's the season of learning and not necessarily the season of earning, and, taking all of that and being able to use that when you do have the resources and when you are I think it increases your rate of growth long term. It's not a linear growth, but you take any pay cut, you take any return cut that you can on the deal, so that you can get the experience, you can learn the knowledge, you can learn what it takes to do it, right? I love that. And then on the flip side is just, okay, let's just try and get a side hustle going. Let's just try and make as much money as I can, and then take that money, put that in, and then learn those lessons the hard way with my own money.
Yeah.
Get that experience, and then once I'm experienced and I've done this enough times, then I can risk it with other people's money, right?
Absolutely. And I think people have this obsession, as real estate investors, we're all about the numbers. And we have this tendency to think that more is better. And, 100 units is better than 10 units. Well, I got to tell you, 10 cash flowing units is way better than 100 that aren't cash flowing. So make sure that those numbers are quality numbers. It's okay to be slow and steady. One property a year for 10 years will change your life. You don't have to be 100 doors a year in order to change your trajectory.
I love that you highlighted that, because that's one thing I see a lot, like as an investor focused realtor, like when I sit down with investors and I'm like, what's the goal? And sometimes I'll hear like, I want to have like X amount of doors, I want to have 5,000 doors or X hundred doors. And I feel like that's more of just an ego thing. You need to dig deeper. It's like, what really is the goal? Why do you want to have that much? And you can have that much and be over leveraged, and it could mean really not as much as someone who's got just a few properties and are way better off financially. So I fully agree with that. Okay, so Elizabeth, now sort of the time for my favorite part of the show. It's where I ask each guest a couple of questions. So essentially the segment's called Time Capsule. So let's just imagine you've stumbled across a time machine that allows you to travel back and forth in time, can't change anything, but you can give and receive advice from your younger and older self. So first, let's go back to when you were 18 years old. What advice would you give your younger self with the knowledge you have now? Now, this can be business, investing, personal, familial, combination of it all. What advice would you give your 18-year-old self? And you give a lot of people advice, so I could just imagine the level of advice. No pressure.
Care less what other people think and care more what you think. I spent a lot of time trying to fit my ethics, my integrity, my standards into other people's boxes. And what I should have said was, I don't care what other people think. I'm going to do me.
Mm-hmm.
And that just goes like in business, in personal, like everything.
Because ultimately, you're not going to be able to please everybody anyway, even if you tried. So people are going to judge you regardless. So you might as well make decisions that will make you happy, make you more fulfilled. And people are more worried about themselves anyway. I think even in that day and age of social media, just worried about being judged and what other people think, I think it's good for people to take that and just let it sink in. Is just worry less about what other people think and just be true to yourself.
Yeah. I think you end up trusting people that you shouldn't when you care more about their opinion than you do your own. And for a while, I wondered, I thought, like, how do I keep ending up in these situations with these people I can't trust? And I realized it's because my gut was telling me not to trust them. And I stuffed all that down and ignored it. And I thought with my brain, and my brain said, on paper, this person intellectually should be fine for me to trust. And my gut was going, no, don't. And I just ignored it. So the more confident I became in my thoughts, my feelings, my opinions, and the more outspoken I was about who I was and what I valued and what I wanted, the more I ended up finding people who were like me, till I got to the point where I have this core group of friends in my real estate, and I know I could pick up the phone and say, I'm in a crisis, I'm stuck, I need help, I need money, I need time, I need whatever, and I know that they would be there for me. And I've never had that before in my life because I spent all this time trying to be something that I wasn't.
Well, two things on that is there's a lot of seasoned investors that I speak to that speak about following their gut. And I think that's something that we can all sort of try and hone in on. But I have another question, is for someone else sitting there that's like years away from where you are, and they're thinking to themselves, how can I go about building a team, a close circle of individuals that I can sort of have that sort of relationship with them all, have that inner leverage, that sort of exclusivity. How did you go about building that? What did you do to eventually get to that position? What were some changes that you made, some things that you sort of started implementing yourself?
I slowed down. So I think we have a tendency to force things, to rush things. We meet someone and we see all this potential. They, oh, wait, I could do this and I could do that. And oh, I really like this. And we have this tendency to wear rose-colored glasses as opposed to slowing down and knowing that in time everything will be revealed. So people will show you who they are if you take the time to sit back and watch. So slow down.
I love that.
You're right, people. When you are confident in who you are, when you are living in your best version of yourself, in the best space, when you are contributing positively to the world and giving back, those people, they will find you. You don't have to look for them. They'll become apparent.
That is beautiful. It really is. It really is. And I think most unnecessarily made mistakes could be avoided by just slowing down a little, not trying to rush that timeline, not trying to just go, but slowing down. I love that. I really do. Okay, well, let's see your next answer though. Sorry, no, go ahead.
I was just going to say, in the world of real estate, like many other avenues, there's this whole respect for the hustle and grind. But honestly, the more I've slowed down and the more conscientious and intentional I've been, the bigger the wins have been that have come to me.
Yeah, honestly, because it allows you to think deeper, think more high level, be more strategic with what you're doing. It allows you to listen to your gut as well, and not just rush into bad decisions. And yeah, no, I love that. I really do. Okay, so let's see your next answer. So let's look ahead to your 80th birthday. What advice do you imagine that your future self would offer your current self at your present age?
Keep things simple. So there's a tendency as you earn more to spend more. And what it does is it traps you. It forces you to continue to stay in the rat race, to run on the hamster wheel as fast as you can for much longer than you need to. And if you keep things simple, if you don't worry about, the Lambo or the big fancy house or the designer labels until you are at a point where you have provided for all of your future needs, then it comes back to what we talked about at the beginning. And I want to take it one step further. It's not just about time freedom, it's about health freedom. So if you are hustle and grind for 20 years so that you can have the Lambo, and by the time you're ready to retire, you don't have your health because you've neglected it, then where are you and what was that for? So
Yeah.
Keep things simple, keep things small, keep things conscious. Be conscious in the decisions you're making and think about what that decision is, what the ripple effects are going to be in your future life and for your future self.
I get that. I really do. And that's, even personally, it's something that I have to remind myself, because it's easy to get caught up in doing more, and neglecting your health, neglecting time to work out, time to do things that are going to benefit you long-term health-wise. But if you think about it, and anyone can put themselves in those shoes, if you think about it and you put yourself years down the line where you're 80, 90 years old, would you prefer having more money in the bank, or would you prefer being healthier? And ultimately, I think most people would prefer being healthier. So it's trying to keep that longevity so that you can enjoy the fruits of your labor long term anyway. So, and of course, your body and your mind, you need to keep that going, because that's the driving force of everything that you do. So it's tough though, because it's easy to get caught up in let's just do more. Let's just push a little more.
Stay up late, one more deal, absolutely. But yeah. I had two sort of things that happened that led me to that. And the first one was my grandfather got sick. And when he got sick, he would call me and he was in the hospital. He was lonely. He was scared. He couldn't always remember. And I had to make decisions about whether I dropped what I was doing and went to spend time with him, or whether I continued working. And at that point, I made the decision that I would always make decisions in a way that I didn't live with regret. So I didn't want my grandfather to pass away and be filled with regret that I had worked instead of taking the time for him. And then my father died very unexpectedly, just 6 months after my grandfather. And I was so happy because I knew that I had spent the time with my family and that I had really enjoyed and been present. And that was really key for me. And then the second one was in 2022. I had 2 surgeries completely unexpectedly back to back. That took me out for, I want to say it took me a good year to recover from those. And it reminded me that if I don't have my health, who cares how many doors I have? Like, it literally does not matter. Yeah. If I can't get out of bed, if I can't have some sort of quality of life, none of it's worth it. And sometimes you learn those lessons the hard way. And then sometimes, hopefully, you listen to a podcast with a really smart guy and he asks fantastic questions and you get to learn that lesson the easy way.
I think it's so easy to take your health for granted until there's something wrong. And that's when it's like, you know, it's so easy to take for granted what we have. So no, I love those answers. They're so insightful. They're so insightful. I'm sure everyone listening can agree with that. But you know, this has been an amazing episode. Honestly, I'm super grateful to have you come on here, Elizabeth, and I'm sure the audience would agree with me. Now, I know at this point, people listening are probably thinking, you know, where can I find out more about this Elizabeth Kelly? She's a really insightful, smart woman. I want to keep it going. What I'll do is I'll leave your info in the description below. But just off the bat, where's the best place for people to reach you? For those listeners who are driving and maybe they're not going to go into the description, but they're going to recall it and they're going to go look you up later. Where's the best place for them to find you?
Instagram, Elizabeth Kelly Consulting. I'm the same thing on Facebook, but everybody seems to be on Insta these days. So there you go.
That is true. Well, Elizabeth, I want to thank you so much for coming on. I want to thank you for sharing. This has been really, really fun.
It has been such a pleasure. Thank you. You have been a fantastic host, and I have really enjoyed my time with you. Thank you for having me.
Thank you for tuning in to the Wealth Through Real Estate Show. If you're curious about transitioning from active flipping to passive rental income, you don't want to miss my episode with Taylor Morgado. This is your host, Alray Noble, signing off.